Hey everybody, this is Brett with the weekly recap here. We're going to do a quick version here today and kind of break down what we saw in the FOMC meeting and the aftermath of all that and the reports that came out before that earlier this week. Saw a little bit of a rally. First, I want to tell you about something else that's happening tonight and to give you guys an opportunity to join in on a free presentation we're going to be doing tonight. I'm going to be doing live with a business partner of mine. And with Max's approval, he said we could let you guys know about that. So if you'd like to sign up for that, that is tonight at 8 p.m. Eastern at moonstream.io/max training. So that's on this screen right here. And if you haven't already seen my report we released last week, the Blood in the Streets report, you can still go download that. There's 3 videos with that. I highly recommend you go see that. Some really interesting information about where we are. I think we're close to a bottom, but there's some nuances to this. Spent a lot of time researching this and putting this together, and you can get that at moonstream.io/max report. And it'll take you to a page just like this, and you can go ahead and sign up with your information there, and we'll send it out to you. A little bit of background information down below that. And then there is access, you'll get access to the video series. There's 3 videos here, so it's kind of a lot to send to you guys all at once. And you can certainly watch these later. Most importantly, the free live event. But tonight, but on these videos here, you can download the slides and then again that report, and you can find all that at moonstream.io/max report. So thanks very much. And again, the live event tonight, 8 p.m. is moonstream.io/max training. So you can just sign up right there, and it starts in about 7 hours, depending on when you see this video. So let's dive into it. Let me turn off the camera here so you guys can see the charts, and I'm going to run through some interesting information with you guys. So just give you a little wave, and we'll talk to you soon. And so the charts here, this is the monthly chart of Bitcoin. And what I'm going to do is put this here away for a moment and come back to it. So not a whole lot that we can see here other than, we broke down below this moving average here, which is the 50-month, the blue, and then we're headed toward the green, which would be the 100-month, potentially. There's some, I think we might get a little bit of a rally here, but let's unpack this a little bit more. And let me kind of scroll down here. I want to show you some other things. So we don't need this. I'll turn off the SMAs. What I want to talk about the potential bull ranges. This is something we're going to talk about tonight. And what is interesting is we are, here's a projection of what could happen in terms of the cycle. And I took these bars here from the 2019 recovery, this bar pattern, and just overlaid it over here, massaged it a little bit onto the timeline where I think, based on the halving right around in the 2024 range, we'll see the big push higher to, let's say, 170,000. I think that's a reasonable target. And so what's important here is that looking at the past bull cycles here, that the returns have gone diminished a bit. The early push higher, of course, that was the biggest one. Now we could go back even farther, but I'm really talking about the 2015 to 2017, 6,339% gain all the way from $240 up to 20,000, right in that range. So that was a big one, obviously. Things corrected. We had a 1,700% or a 17x rise from the 2019 lows up to the highs of 2021 into the end of last year. So where are we now? So the potential gain here, I still think, is 1,000% or a 10x on this next run. Basically, if we start to bottom here, which we could. I think there still could be some further downside here, but that would be sort of a surprise capitulation that would regain fairly quickly, I believe. And so again, this pattern, if we did push up here, even up to the 50,000 range, which I don't think is going to happen just yet, but I still think another pullback and retest here would be likely before it has that trampoline to go higher, and based on the halving and the pre-halving accumulation. So let's turn that off for a second, and I want to look at instead these projected bull cycles here. I'm sorry, the correction ranges rather here. So again, the past 2 cycles we've seen an 85% retraction and retracement from the high to the low back here, 2014 to 2015. Again, 2018 back into this range here, of course, into the 2019 range, 85, call it 85%. These are both 84 and a half, 85. So if we were to see an 85% correction here, now no guarantee that we do, but that would put us right back at that $10,000 level, which, as we can see, is fairly significant support level there, which if I put these trend lines back on, we can see that. And so I'll just zoom in on this a bit. Again, the levels I'm watching here are the $14,000 level, which we'll look at here, and why that would be. And a high level, basically that top back from 2019, and then where it became support and resistance, then support, and this October 2020 and then November 2020. So this 14,000 level, very significant. If we do drop, that's an area I would start dollar cost averaging in. And then below that, we have 12,500. So again, that would be this SMMA level where the 100-month moving average is right around this 12,500. Might be a little higher since we are coming up on things with the moving average pushing higher, but it's also that top of the August 2020 where it rejected on this monthly candle before pushing higher. So resistance became, shot through there, but to come back down, that should provide some additional support in that 12,500 region for that reason. And of course, the $10,000 level, which again, as I indicated, is that 85% retracement. Now I've drawn my third DCA or dollar cost average level a little bit lower, again, because again, as I've mentioned, there's a CME gap here. If we can hit 10K, I think that's reasonable. It'll dip down, and so we won't probably hit 10K without more contagion and some bad news in the markets. So to come back down here, probably dip down below. I'm projecting 97.80, right around there. This may be not drawn to scale, but 90. We'll look at this on the CME gap. Just we have covered that in past videos. So these are the levels. Some people are saying 7,000. I just don't think we go that low, and so certainly this may take time to work itself out, because there's looking at the monthly MACD, not this one here, actually this one here, this one. So we were watching, and the reason I was calling the top back in here because the MACD was so overextended. And then I was telling people to get into cash here in November as this sort of peaked again, and then really pounding the table to get out of the markets in January, mostly because of this big cross on the MACD. But more importantly, it shows that it takes time to turn this. It's like a big battleship on the monthly charts. So it's not going to go straight up. It's going to take a little time to work its way back up into these higher ranges. And so we'll be watching for that. And that puts us probably right around the first or second quarter of next year, where it's kind of crossing over. But the whole point of this and the presentation tonight is that if we have bottomed and are close to a bottom, and I don't think we've quite bottomed yet, I think we're close to a bottom, then these are the ranges we'd want to be watching for and potentially getting back in these markets. And so I'll just turn these off really quick, and we'll go a little bit deeper here tonight on the presentation that we'll be doing. Again, that's at moonstream.io/max training. I'll make sure I got that right for you guys. And there's more we can look at here. We've got some bullish and bearish engulfing candles on the monthly, and we also have some other levels that we can keep an eye on in correction ranges. So with that, why don't we hop over actually real quick. This is the other indicator I watch on the monthly. This is one of our proprietary indicators that we'll be featuring a little bit of tonight, and really is what I rely on as my North Star. It's something we developed in-house. So when these start to turn, we have these printing green larger signals, and then when it breaks above the 20 is one of the things we watch for, and that was one of the lows back here, and of course the low back here. So that was highly meaningful. And the other indicator, there's two of them we watch, so we're going to talk a little bit about those tonight. This one here is a trend strength indicator, and the other one is an early reversal indicator. And so when they line up, they've proven to be highly accurate. So if I turn this off here, so when we had this green arrow back here and it confirmed on this, that was the sort of 2015 bottom where things ran all the way up like I talked about. And that was at 6,000%. This shows 8,700%. But that was that big run up there, again, on a monthly chart. I'll just move this up here. Just wanted to show you a different perspective on some of the things we are looking for and why I'm thinking we are getting close to a bottom, but not yet, because I haven't seen what I need to see here. This green early reversal indicator, both on the monthly, this monthly early reversal, and the trend strength indicator. That's what I'm going to be watching to get in. Similarly, we have these reversal candles here. Really stands out on the weekly, so why don't we hop over to that? And again, we'll be diving into this a little bit more tonight. The accumulation zones, where we might want a dollar cost average in. So we're currently here, and I drew this red line as a possible line of sight, a path. A couple of weeks ago, I thought we'd push up right to where we are, and it would reject, which it did. There's resistance here at 18,500. Also, this downward sloping trend line. So I do think we sort of work our way down, have a little bit of bounce at the 14,000 range, and then come down to that lower range that I mentioned before. And that's what we're watching for. But on the RSI here, it's interesting, sort of working, it's kind of higher lows on this. It's slowly working itself higher, but it's going to have some trouble right in this range. That's why I have a green box around it. If we break back above that, and I have my alert set at the 40 level on the RSI on this weekly chart, then that would be an indication things are turning around, but it certainly could kind of bounce around, come down a little bit more, maybe even retest these lower regions. But within this little area here, it's either going to break higher or lower. So we have to wait and see on that. The stochastics RSI does seem that it's bouncing a bit. These things tend to run all the way up to the opposite edge of the oscillation there. Of course, they certainly can fail, but then on the monthly basis, they generally do that. Going back all the way back here into October of 19, we had a reject there, but it looks like as of now on the monthly, now things could change. We're only halfway through December, but if it continues, then we could see kind of a push up here into the end of the year. And I think what we'll see is a big sell-off end of the year. And that's from window dressing the big institutions, taking tax losses, taking their losses, and then reinvesting in things they feel will perform better in the next year. So that's called window dressing, happens every quarter. And that's likely to happen this quarter, end of the year as well. So this here, I won't go into too much of what this is, a little bit complicated, and as far as bullish and bear cycles in these blue zones, other than just to show you that the indicators we use here called the bottom here, these green arrows pushed all the way up. That was 277% gain. And then we had the reversal ERI red arrow there, came down 65%, caught the next green one here, March of 2020, caught that COVID close. So if we compare that to the ERI and TSI when they're in alignment, nailed that bottom, so that ran all the way up. These middle arrows were invalidated. They weren't confirmed in here. So I'm just giving you a little bit of a clue of some of what we're watching for, and also called these bottoms here last summer to the week on July 2021 with the confluence here and here. Then again, so the top short-term top here, it did trigger, and then it double triggered. So was watching this saying, all right, we've got a red arrow, and then we also have the TSI rolling down. So that's how we call this market top also in the summer. And and then again here. So we've been very accurate with these. Kind of watching these things very closely. We have a small green arrow, and the TSI is trying to break above this 20 line, but not quite there yet. I don't know. It's not strong enough for me to say that we go higher yet. New information, new decision. We're keeping a close eye on that. Now here's another look at the weekly for Bitcoin. We don't need to see that. I'll just open this up. Why don't we jump into the daily real quick on Bitcoin? And this is, again, I have been pretty good at watching these. We've been watching these together, these lines, and I did say this push up here into this resistance area. And even on the 4 hour, that's really easy to see on the 4 hour. We've been watching this very closely. So here's a 4 hour chart of Bitcoin. Yesterday we had that run up here. The CPA data was good. It came right up to this area, and I was telling some of the people that some of our students that basically this is going to reject and come back, and sure enough it did. But yesterday during the FOMC, this was a big green candle, and it looked like it was going to break out. Always want to make sure to wait till the end of the day candle close, because this is what happens. Big old doji here. It was a big green candle, and I'm sure that the powers that be were front running this. I was telling people yesterday this is a sell the news event. And sure enough, it was. They were pushing it higher here and selling into the retail buyers watching CNBC and saying, "Hey, great news, inflation, CPI," and so it's come back down. Now, what will be interesting to see is this is going to break higher. Now, technically, this is an ascending wedge, so we might, we'll either break up or down. It's going to get closer and closer, and then this is the big question mark: which way does it go? Right. So this is kind of why I recommend caution and wait for a clear indication either way. We do have some other things we're watching, probably beyond the scope of this video, but you can see this as a sort of symmetrical triangle or sort of ascending. It's a little bit of both. It's this ascending triangle here from farther back, but in the shorter term, these ascending triangles do tend to break to the upside. So we'll be watching for that if we get a break up higher and up in these regions. So now on the stochastics RSI down below as well, this is one we've sort of customized, but this would indicate we get a bit of a bounce here soon, which is why this squiggly line indicator, which I just drew on here, is why what we're watching. Big question mark, don't know yet. Quick look at the, let's take a look at Ethereum, and do want to look at Bitcoin dominance, which spiked yesterday, which was interesting. And Ethereum, is just sort of not doing a whole lot here. My trend lines, I don't have all the way drawn on here. I'm just going to redo those. But, let's look at a weekly on ETH. And I'm sorry, we're still on the 4-hour. Let me hop back over. Sorry about that, guys. Thought that didn't look right. So that was the 4-hour below or before we're back to the daily. There we go. This is what I wanted to talk about. So in terms of where we go from here, we have this interesting sort of pattern forming. It's broke out above its trend line here, failed. We had the big FTX collapse, still above this long-standing trend line resistance though, here and there. So it's indicating a bottoming pattern, but too early to tell. Where I would be interested in buying more ETH between right around that 900 to 1,000 level would be a good place to start dollar cost averaging a bit. However, it's overbought on the in oscillators here, and let me check our trend indicators. This is showing a little bit of a bullish signal here. There's a bell here. This is but let me kind of stick with the general overall TA here, because that's what you guys will have access to. So the other buy zone here, I think between 500 and 600, 650, if we do come down here, and the reason I think we might, we'll just flip over to the total market cap, because this similar type of range is playing out in pattern in the total market cap, right? So very close to ETH. ETH is following this. So remember, again, that resistance trend line broke above, fell back below with the FTX collapse, and then kind of inching its way higher. It's sort of holding in this liquidity zone area, but I drew this a while ago. Obviously, I was wrong in the timing, but it's still, if we do drop down, see, there's some talk about Binance. So Binance has $3 billion in crypto has been removed off the exchanges. Now they have 70 billion. It's a much different game than FTX. Binance doesn't have an Alameda arm that we know of. Well, we don't think so, but they're not audited. It's not a U.S. company, and they're not regulated. So we have to be leery of what the next shoe to drop could be. And that is something I cover in the Blood in the Streets report. If you haven't read that, again, that's at moonstream.io/max report. Would love to get this information to you, and there are those 3 20-minute videos that go a little bit deeper into what's in the report. And in there, the reason I mentioned that again is we talk about what else could go wrong. What could possibly go wrong, right? And so I talked about GBTC, and there's Gemini has some exposure because of the Genesis lending platform that's going bankrupt. And so there is likely more contagion that we just haven't seen yet. I don't think it's I started calling it MicroStrategy because it's faster. That's MicroStrategy and Michael Saylor. But MicroStrategy, they really are pretty safe. The research I've done, and I have mutual friends with Michael, they took out low interest loans in the debt markets that were not margin loans. So they don't have high interest margin they're paying on. They don't have a liquidation level that is in possibility, I think, at this point. According to them, they were smart and they had low interest back when interest rates were low. Debt service and where debts were the debt service is 5 million a year. They can make that in the business unless the business really starts to suffer in a grand recession. So there's still a risk. There is still a risk there, but their point, if we get down to 3,500 where it would become painful for them, we've got bigger problems. So I did not anticipate when I wrote the report that Binance might be on the chopping block, and that would be catastrophic. So I think that the industry as a whole can't have another Binance. I'm sorry, I combined FTX and Binance. I hope that wasn't a premonition there. We can't afford another FTX, and that if FTX, I read something about that recently. If FTX was catastrophic, Binance would be apocalyptic. And some big SET words there, guys. And I think that's true. However, whatever, if it triggers the next phase of this, if we do see, and we really haven't seen the level of capitulation in that cycle of investor emotions, which we also talk about in that report. Here, I'll just see if I can bring this up real quick, because this is what I'm waiting for. And I'm sorry, not that one. Here. I'm sorry, guys, this is not the right presentation. Let me get out of that. That's not what I wanted to show you. It is, I have screens all around, and it's going to be this. No, I'm not sure why that's not showing it to you, but now that I've mentioned it, let me drag this down. Where are we now? This is what I wanted to show you, and oh, I see. I know why. Yeah, this is what I meant to show you. So basically, this is the cycle of investor emotions. And so this is back at the top where everyone was buying. Your neighbors were saying, I've got to get in this. And the FTX had Tom Brady calling down us on the commercial saying, are you in? And this is that in retrospect, we should have known better, because when everyone's saying this is great, you got to get in, and then it starts to turn. This is the point of maximum financial risk. And so you can find these on this slide in the report. You can find it online if you search for it, the cycle of investor emotions. However, more importantly, when we get down here, I know nobody wants to get down here, but we are down here. And so the point is, we've been slowly capitulating, but usually there's a big final blow off that gets to the bottom where everybody is just despondent and swears off investing forever. And to the point where when it does start to go up, people are skeptical at the beginning. So that's usually, and again, a capitulation move. I'll put this away, which if we go down here, we want to watch for this. If we go down here and we see the total market cap, which is an excellent barometer of where we go, then this would be a great accumulation zone between 500 billion and say 600 billion. Okay. And the reason I say that and why it's worth watching, again, this is a daily total market cap. Well, where was the top? How many people were watching this? Total market cap came right up to $3 billion, almost to the penny. I'm sure it was not the penny, but 0.012 trillion is not to the penny, but pretty darn close. And that was the market top. Came down, tried to get back up. The 2 trillion level, rejected. Try to get back up of. Now it's in this downward trend channel, and try to push up one last gasp. This is very familiar and similar to the Wyckoff accumulation patterns. If you're not familiar with those, then that's also in the report, but I didn't plan on bringing this up, guys, but it's relevant. So the Wyckoff patterns, there's 5 phases. So this one here is this sort of the ultimate, upthrust AD, and that stands for the upthrust after distribution. So if you'd like to learn more about Wyckoff patterns, really interesting, and how Bitcoin followed this and sort of had that last gasp before it continued lower. The LPSY is the sort of last point of supply, and then these 5 phases. This has been going on for 100 years in the stock markets, and essentially it's how the bigger investors play the game. They come in, they have accumulation zones, they mark up price in phase A, and then in phase B, they're sort of distributing, and then they have a final push higher in phase C, the upthrust. It's a bull trap, which we saw happen when we This is where we broke up above the real high of the market, and Bitcoin was back here. And then this right here even projected this, which is the exact price pattern we've seen. We're down in these lower levels. So this is not new to most investors. So we'll cover that and talk a little bit about that more tonight. Anyway, so the reason I mentioned that is, this was this up thrust after distribution here, where this was the real top, and then it went kind of continued lower and lower and lower, just like that pattern I just showed you. So where's the bottom, right? So if it's possible, it's in. It is possible, but with all the bad economic news, not likely. And Powell's comments yesterday were, and I'll quote loosely, is that they are getting the product sale inflation under control, but the inflation on services still not under control. And so they're going to continue to raise rates into next year. He said that no planned reductions in 2023, maybe 2024, but it's going to take a little while for them to have a soft landing if they can. All right, so with all that out of the way, I reserve the right to be wrong, but I think we have some more downside coming, and we'll be watching the total market cap. So real quick, the Bitcoin dominance chart, again, that thing is breaking out of a trend line. Interesting. So there was money coming back in the markets yesterday, and it was mostly coming into Bitcoin. And kind of for a minute there, it looked like we will head down into altcoin season territory, but and we still may. These charts just may be a bit of a fake out here. So not that I want anyone to go out and buy anything, especially altcoins, but very interesting. ETH dominance still in its upward trending channel. Slowly, it's sort of holding the line there. A little bit encouraging, but the money as of yesterday is going into USDT, back into stable coins, also in an uptrend. So these are things we want to watch for. USDT and DXY, of course, have an inverse relationship to Bitcoin. Here's the problem here. Now, DXY pulling back to this secondary support line. When and if it bounces, I thought it might bounce here, but we're down onto this one. I'll zoom out. This is quite a strong, see, this is resistance level, now support on the DXY, and a major resistance there. So this is a strong level right here, guys. And so if the DXY bounces, which I think it will, guess what's going to happen? Everything else is going to go down. I think we'll get rejected on that. And as it bounces, again, inverse relationship. So bounce in DXY, we're going to see crypto come down another wave. That's what I think. And typically these things have a double test on this. So we have this kind of pattern maybe playing out, whereas this puts us into May of next year, not drawn to scale. I think I missed probably in this. I'm thinking March. I'm thinking March of next year. We kind of start seeing the bottom. So anyway, that's all we have time for today. I hope you guys enjoyed that. It's the Sea of Red today. We are anticipating a bottom in the coming. I'd say this month. I'm feeling we could see a big drop, scare the pants off of everybody, window dressing end of the year, and that's when the bottom is in, but it won't really start pushing higher until later. Now, of course, I'm watching this ascending wedge on the daily, however, as well, and it's not clear. So there's two scenarios here. We'll talk about this a little bit more tonight, but these two scenarios, if it breaks down below this trend line, 17.5, then I think we're going to 14 and lower on the way. If it can break up above here and hold there, well, then that's a different scenario, and we'll kind of we'll unpack that a little bit more tonight. So again, that this is a little bit last minute notice. Apologies, but if you're able to get onto this, it's moonstream.io/max training, and then the report again I mentioned is at moonstream.io/max report. So at any rate, thanks very much, and hopefully that was helpful. And guys, give you guys a quick wave here, say goodbye, and I look forward to seeing you on the presentation tonight if you can make it. So again, this is Brett with your weekly market recap. Take care, everyone.